l'assurance subit un changement de plus en plus fort. De nouveaux acteurs se profilent face à une nouvelle demande. Partageons et échangeons nos points de vue avec nos invités experts.
So thank you all of you for joining us and being here among us in Casablanca for this Rendez-vous de l'assurance. Just want maybe to start by having an open thoughts and ideas from you to understand what leaders like you think about this major issue of disruption in insurance industry. And I want you to tell us, according to you, what are the main challenges for the insurance industry, particularly in your country, but also globally? What is the context now, and what do you think that all we heard from this beauty face and from papers and about how technology is disrupting your businesses and your industry? And if you allow me, maybe start with you, madam.
Yes, thank you. Thank you very much. Thanks for the invitation. Now, the way I see it, and I'm not thinking particularly just Lloyd's, and I'm not thinking particularly about the UK. I'm thinking very globally about some of the challenges insurers have, because many of us have been around for many years. Lloyd's celebrating its 330 years of being a market this year. So you can imagine how much tradition and how many old-fashioned processes we have going on. But I think there are three key things that I think are the most challenging thing for us. One of them is our own people. Now, people, a lot of them find change very, very difficult. And we all know that in our sector, we rely on people. People, we're providing a service, we're not manufacturing physical goods and shipping them around. We rely on people. And they've been doing a fabulous job so far, but we need them to change. And that is one of the toughest things, is to get people to actually change. They're very fearful of the future. They're feeling perhaps they don't have the right skills that we need, and they're therefore very nervous. Now, in the Lloyd's market, as I said, 330 years old, we're doing a major transformation. We're using and introducing technology. The technology is not the challenge. The technology is there. It's getting all of our people to adopt the technology, to think how they can work differently, to have the courage to step up and change the way that they work. And that is the most challenging thing, to win the hearts and minds of thousands of people who've been used to working in a certain way. The second thing, I think, is fundamentally about our products. And when we think about how we're delivering our products at the moment to our customers, that is a big, big challenge. Everybody now is moving or living in a me-now society. We want answers instantly, whatever time of day or night it is. Generally, our sector is not very good at delivering in a me-now environment. And we've got to fundamentally adapt to that and think about what our customers, and particularly the next generation, want. They want it now, and they want to pay for things as they're using it. We talked a lot about mobile phones, the Android phones. What are they doing for our lives? Now, if I just think about London, sure, some of you have been to London. We've got an antiquated underground subway system. And in the old days, to travel on it, you would buy an annual abonnement, a season ticket that you would use when you went on, and you paid a flat fee for the year. Now I go on the London Underground, I use my watch. I pay with my watch as I go through the barrier. I pay, or I stop paying when I go through the barrier at the end of my journey. I only pay for the moments I'm using it. Our products aren't geared up for that society, and that's another huge challenge. And the other piece, and that was just mentioned by our previous speaker, is regulation. Regulation can't keep up with what's happening in this disruptive world. They can't keep up with how the insurance product is changing, how the actors in the insurance sector, how they're moving fast. Regulation is struggling to keep up. And I was recently at a marine conference talking about autonomous ships. Autonomous ships are there, but they can't be used yet because we haven't agreed a legal landscape in which ships can go from port to port all around the world and even get into the port. And that's a real struggle for legislators and regulators to keep up with technology.
It's really disturbing me as a user, talking about autonomous ships. And at the moment talking about that, we always think about autonomous cars. And what about the autonomous aircraft in the future? I don't know. Mr. Bernard SPITZ, thank you for being here. And let's see, what are your thoughts about all these disrupting things in your industry globally, and how do you see this important issue coming to your industry?
Well, thank you. I know we are going to speak in English, but je voudrais d'abord remercier en français les organisateurs de cet événement. J'ai eu le privilège d'accompagner cette conférence au fil des ans, et je vois chaque année plus de monde, plus d'attention, un programme plus dense, et donc je tiens vraiment à féliciter mon ami Mohamed, président de la Fédération, pour ce grand succès, et je souhaite que ce progrès continue, et nous avons d'ailleurs des projets communs, car c'est important de faire ce lien entre l'Europe, en particulier la France, et le Maroc, avec le hub que vous représentez pour l'Afrique. Voilà, je voudrais vous féliciter, je suis très fier d'être invité à cette conférence. Alors, now going back to disruption. Well, you have several definitions of disruption, and I could also argue that this is a French word, because in the under the King Louis XVI, you had already discussions about disruption. Of course, it was not so much technological, but it was already in the discussions. And it was a rupture. It was more about geological rupture, but it was already a big change. Today we have several aspects of disruption. Of course, technology is one. Economic is another aspect, with the impact on productivity, on the value chain. And maybe, as Inga just said, the social aspect, the human aspects are first, because, of course, lifestyle has changed, and now the expectation of the young generations and also of the consumers are dictated by the new way of doing business with new technology. I mean, reactivity, simplicity, transparency. These are some new issues. But maybe the most important one is regarding pace and speed. I can take a risk by saying al-waku min dahab. It is important. The speed and the fastness is key. And we know now that we have seen new models. We have seen the largest company of taxi in the world without any cab, the largest company of tourism in the world without any hotel, Airbnb, and we of course have mentioned what's going on with deep learning and autonomous car, etc., etc. So things are moving. They're moving fast. And so the question is, for a sector like an industry like insurance, how do we deal with something which is going so fast, and an industry which has a long-term business model? And this long-term business model is the key of our industry. And we know now, if we go in the Silicon Valley, you realize that the life of a company, the rhythm or the cycle of a company are 18 months. If you are not capable to develop your model before 18 months, you are dead. You don't exist any longer. It's a big change. That's why digital transformation is on all the agendas of our companies. Sometimes it's difficult, but it has a lot of impacts. It has. We are talking about implementing a smoother process, and we are talking about going paperless with mobile and with a new target to use all multi-support technology. And of course, what is key is to create a more customer-centric relationship, which is now what the consumer is expecting. So this is the movement. This is what's going on. We work, the industry in France, and I think in many countries, work with startups. And we believe that we have a lot to learn from them, and they have a lot to learn from us. And what we try to do is to create the best world and to take advantage of this new energy, this new vision of things, to improve our model and, yes, change, because the world is changing and insurance is changing with it.
Thank you. We're going to address that topic about how do you deal with that startups, and particularly how do you learn from each other, but they need your money to grow. And how do you deal also with that big issue of financing the startups to go for disruption and bring something new to your companies and also to your customers? Tom Leonardi, thank you for being among us and coming from USA. I just want to ask you the same question. What are the main challenges, according to you, for the insurance industry?
Well, is this on? Yes. First of all, thank you for the invitation to be here. This is my first time in Morocco, and it was this conference that brought me here, so I'm really honored by the invitation to be here. This is a beautiful country with a storied history, a vibrant culture, wonderful people, and one note that you may not be aware of, but Morocco was actually the first country to recognize the United States as a sovereign nation back in 1777 and entered into a treaty of friendship with the United States in 1786, which is still the longest unbroken treaty in the 235-year history of the United States. So it's delightful for me to be here. In response to your question, I think there's obviously Inga and Bernard touched on some of these, but I would also start with social. Customer behaviors, demographics have changed, expectations have changed, and the rise of social media in terms of reputation as well as the ability to access the marketplace. So that would be one. Environmental issues. The insurance sector has a significant role to play and has for centuries in dealing with the impact of severe weather, and not just from losses, but also to increase economic resilience. And I think the availability and increase of technology in that area is and continues to be very, very important. From an economic standpoint, we're still dealing 10 years later with the aftermath of the financial crisis, with the impact of prolonged artificially low interest rates, which is moderating a little bit at this point. We have a growing urbanization in many nations, and all of those factors are weighing in towards technology as well. This was touched on earlier, but from a political standpoint, this is probably the most heavily regulated industry, and AIG is probably one of the most heavily regulated insurers in that industry, so we understand it well. And as a former regulator myself, the importance of understanding whether it's insurers in the business or those looking to be disruptors in the business, the importance of regulation and how to deal with regulation. There are a number of discussions going on about capital standards, about cybersecurity, about data transfer, but there are other political issues, for example, with Brexit in the EU and the UK, possibility of trade wars and how that might impact this industry. And then I guess lastly is the ability for regulators to get comfortable. We've seen some countries out in the forefront of using what are referred to as sandboxes, where you're able to, on a limited basis, try out new things in a technological way that regulators may not be sure about, but are willing to let you test it. And if it works, expand it. If it doesn't work, you've stopped it soon enough and no harm has been done to customers and to consumers. Again, the UK and Singapore are probably leaders in that. In the US, the NAIC, which is the organization that the insurance commissioners work through and sets policy, the issue there tends to be what is in that black box. The black box is being used to underwrite, and if we as a regulator don't understand how the black box works, we worry about something that's known in the US as disparate impact, which is the ability to underwrite on a basis that really has no relationship to true underwriting and loss. It could result in prejudicial issues. And so the ability for regulators to get comfortable with what's in your black box is going to be very important, and that's another barrier towards a free acceptance of what's happening in the technological side.
Thank you. I want now maybe to ask you to have your opinion and analysis about the threats and the opportunities from this disrupting technology and what they come with. And my first question will be, according to you, are technologies threatening the full value chain in your business, or maybe targeting some of the main links? What do you think about that, and what can you share with us? Maybe start with you, Ms. Bale.
Sure. Well, in the ones that I've seen, most of the startups and all of these disruptors, they're taking little chunks out of the value chain. There's hardly a player out there who wants to do the whole thing. It's way too difficult. And many of the disruptors do not want to be the risk carrier. They do not want to have responsibility for that risk. They're disrupting all along the value chain, but they're only doing little pieces. And it was very interesting as I started on this modernization of the Lloyd's market a few years ago. We got a bunch of fintech, because insurtech, the word insurtech hadn't been created then, it was still just fintech. I got a bunch of the fintech experts from the UK to come to Lloyd's to listen to our dilemma about modernizing our market, because I thought they'd be really excited at the opportunity to come in and do something. And they took one look at the complexity and they ran miles. I never saw them again. In fact, I think I saw one of them come back. They came for a day and then we never saw them again either. Because the prospect of trying to disrupt that whole piece is way too big. They don't want to do that at the moment. They want to do little pieces of it. And that's what makes it so difficult for the regulators to keep track of it all, because they're doing a little piece over there and then a little piece over there. And seldom do you see them do the whole thing. Now, I think that is going to be, we're going to start seeing that change. Now, I say that because one of the big IPOs that's just been out there, which was in Hong Kong, the largest insurtech IPO that took place, Zhong'an, Chinese backed, they did a $1.5 billion IPO in Hong Kong of an insurtech. Now, they are delivering the whole piece according to the customer. They have delivered in 12 months of their first year of operation. They did online policy issuance, 630 million policies to 150 million customers in their first 12 months of being in existence. Now, when I saw that, and that was last year, that really made me wake up. And I thought how things have changed, how quickly they've changed from just a few years earlier when I'd got these fintech firms in to try and help us modernize Lloyd's, and they ran away. So things are moving very, very rapidly, and I think a lot of it tends to still be in the distribution aspect rather than the risk carrier aspect, but I imagine that it won't be too much longer before the risk carrier aspect comes into being as well.
You were mentioning that the next generation is really challenging your industry in a way. Their needs are different. If we compare that to the needs of the generations you're addressing now, they want only some kind of solutions that answer their real needs, and they want to pay only for that. is that also disrupting? I mean, is it a societal issue for you, this coming at the same time that technology disrupting?
Well, I think it is. It is going to be a disruptor, and it is going to, well, it's already, disruption is affecting our societies. Yeah? I mean, we talk to teenagers, and we accuse them of not having conversations anymore. They're on their mobile. I'm having a conversation. I'm having a conversation. For us, it's not a conversation. So we know that it's already, the next generation operate completely differently to the way we do. And that's why when we're doing this disruption, it's so important we include them, the next generation, in designing the future. Because it's the only way, because I can't possibly know what the customers, the next generation customers want. And of course, we also have this rising distrust. I think, you know, Tom, you mentioned earlier about what's going on in the world, uncertainty, political disruption, and we've got a complete lack of trust. And our business, our insurance sector, relies on trust because we're giving a promise to pay for something in the future. So I think we've got multiple things going on here for the next generation. We've got to get them to trust us in the first place. Never mind think about they need to buy some insurance. Never mind they think about is it going to be giving them what they want as they want it for, and they only want to pay for it. I think we've got huge issues ahead.
Oh, thank you. Bernard Spitz, we heard some numbers about this new way to sell, to distribute, and to bring insurance to customers, and particularly in these disrupting companies, and the way they provide that. How do you see and do you observe the threats of technology and all that startups for the whole value chain? And do you agree that they are trying to reach only some of the links? You were mentioning that if they not succeed after 18 months, they will disappear.
Well, as I think Mohamed said in his introduction, technology has two faces, and you can see it from the window of opportunity and the window of the street. And there is always the two options. What's just said in Inga is true in a sense that few startuppers, few companies decided to carry the risk and do all the chain of value. We have the example of Lemonade, maybe in the US, of Alan in France, and we shall see. But there are really quite a few. But I think that all these disruptors are focus on one part of the value chain, and they are enablers. They improve this part. For instance, we have a good example with fraud detection. All the software which have been developed are improving the value by creating good answers to limit fraud detection. That's one example. Of course, if we think about all damages with the new technology, the digital drones, etc., we can have pictures from in natural catastrophe, even in any kind of car accident that will accelerate, improve, make simpler all the process. So we have a lot of examples also in connected objects and so on, and this will be a trend in the future. But we have also some more systemic things to take into consideration. I don't know if we will talk about cyber, but cyber is now a big issue. Data protection is a big issue. Think about what happened to Facebook last week. So we here have a lot of questions on the table, and that will be a combination of good points, bad points, and we will have to take in our industry the best of the technological solutions to improve again the value chain, improve the satisfaction of the consumers, and make the system more efficient. But there are some things that are not going to change because of the new technology, and this is, for instance, the cost of, for instance, I don't know, natural catastrophe.
Sure.
Except if we can think what could be done in terms of anticipation or in terms of education for the people, but this is a large scale of elements. But what can be, and we are not certainly, I don't think that you will be, you will think differently, will not reduce dramatically the reinsurance costs, but we will have still the internal costs in companies that can be improved. We can be able to provide 24/7 days a week service because of the chatbots, because of the artificial intelligence. So this is a big process with a lot of aspects, but I'm an optimistic, so I think that we will be able to take the best of these new capacities.
I appreciate that you're concluding on this, saying you're optimistic. It means we have to see what are the opportunities and how to catch the opportunities. I just want to have one last question about that. You were saying in your first thoughts that your industry is a long-term business, has been a long-term business model, and still. What does it mean? You still have to act as wise persons, managing a lot of assets before deciding what kind of disruption you want to adopt, or you have to be at the same time these global players as fast movers?
Both. There is no contradiction. We have to think long-term because the economic model is long-term. And when we talk about something like natural catastrophe, we are not talking about last year or next year. We are talking about cycles, long-term cycles, and the answers have to be thought in that context. But at the same time, we have to act quickly. We have to take advantage of all the new opportunities, and we have really to improve the model. Otherwise, and we know all that, other will do it if we don't do it.
Thank you. Let's talk now about InsurTech. This is the way we say now, InsurTech. After the FinTech, we have the InsurTech. Tell me on the blockchain technology. This is one of the words we've got this morning. What are the applications in insurance?
Well, let me just go back to the last question first, then I'll go to blockchain. I think there are just some specific examples, I think, that can add some flavor to this. AIG is a company that's going to be not celebrating 235 years like Lloyd's, but a 100-year anniversary next year with 50,000 employees over 80 countries. And yet when our new CEO, Brian Duperreault, came on board a little less than a year ago, one of the things he did is to create a new insured tech-enabled platform called Blackboard Insurance, which is one of our main business functions. And Blackboard is really intending to help our agents and our network partners better able to interact in the new world of InsurTech and to enable them to be more productive and to spend less time on the processes and more time dealing with developing their business and working with their customers. Two other examples that are real-life examples in the US, and this alludes to something that Inga was talking about. There's a company called Zenefits, which came out a few years ago as a startup and raised a substantial amount of money, well over $1 billion. At its high point, it had a market value of a little over $4 billion. And it was providing basically a seamless InsurTech way for small companies to put together a whole health insurance and benefits package. And it was very cost-effective, loved by its clients, but it ignored, while it had all the InsurTech down and the customer interface down, it totally ignored all of the regulatory issues of selling insurance and licensing agents, and had significant setbacks when a number of states, including its home state of California, dropped the hammer on the company and said, you're basically operating without a license. They paid millions of dollars in fines, had tremendous disruption. Their valuation dropped from $4 billion to $1 billion. So the understanding of the insurtech world of the importance of regulation has become front and center in large part because of Zenefits. Now, on the other side of the equation is a company called Lemonade, which is a peer-to-peer personal lines company, primarily small homeowners and even apartment renters insurance. And what they did, in contrast, and it's very slow to grow, but they decided to go to the state of New York, which is perceived to be the most difficult and rigorous regulator in the 50 states, and applied for licensing and basically decided we're going to do it right and make sure, yes, we've got the technology down and the peer-to-peer concept down. I'm still not sure if peer-to-peer insurance works, but that concept is part of their approach. And yet what they did do was get all of the licenses in place, and they are now up and running and are actually viewed very positively by the marketplace. So now with blockchain, I'm not an expert on blockchain. I've had it explained to me by experts on a number of occasions, and it makes my head spin. I know that there are a few ways in which we at AIG are engaged with blockchain, and I can share a little bit about those with you. We have, one example was a partnership we have with IBM and Standard Chartered Bank, and the goal was to execute a multinational coverage, but to do it in a more efficient way, in a more transparent way. So what they did is they created a master policy, which was written in the UK, and using blockchain, they connected 3 local policies, one in Singapore, one in the US, and one in Kenya. And this allows for a real-time data and documentation of the policy, and it allows those who are appropriately looking at the policy to be able to see it. But the big reason for using blockchain is the streamlining of the process. We're told that it has greater security, less vulnerable to cyber, which I assume we'll talk about in a moment. And then it allows for timelier underwriting and issuance of policies. Another example is we were working with a global logistics firm, a large international firm, and have actually put in place for them the first trade finance using blockchain. And what this has done for them is it improves their access to capital, improved the payment mechanism with their customers, and it's optimized the working capital and created more transparency in the process. And then lastly, there's a group of insurers, 38 altogether throughout the world, that are engaged in a consortium called the B3I. And the intent there is to use blockchain as a way of transacting business. They were doing a pilot program in the 4th quarter of last year, and it's supposed to go up live this coming year. So there's another example of using blockchain in the reinsurance markets.
Thank you for these examples. We're talking about blockchain technology, but we can maybe also talk about artificial intelligence and machine learning. Can you tell us, please, Tom, what impact is this having to your industry?
Well, you know, big data and the Internet of Things is allowing us to be able to be, I mean, much like we talked about earlier, more responsive to the customer, to allow for, with using artificial intelligence, better risk management, which helps us to basically help our customers, lower our cost of doing business, lower the customer's premiums. In our traditional business, we're looking to minimize the disruption to our clients. And on our personal lines, for example, we have a large travel insurance operation throughout the world, and we're able to use artificial intelligence in 2 different ways. One is to help customers as they're going through planning their trip about different services and goods that might be appropriate, almost like with the Google Ideas. And then on the travel assistance app, when a customer is traveling in a foreign country, they can have real-time information provided right on their phone in terms of traffic issues, weather issues, political unrest, whatever the case might be. And this is, again, a way of using technology along with our insurance capabilities to keep our customers better able and better informed to access what we have to offer them.
We were talking a couple of minutes ago about cyber risk. And this has become a huge issue for companies to manage in all sectors, in all industries. But if we can focus a moment on your particular industry as insurance industry, can you tell us about your experience at AIG and what you do to address that kind of risk? Sure.
AIG is the largest underwriter of cyber policies in the world right now. And what the biggest issues are it is, as you said, it's pervasive in every industry, and it's not just private industry, it's public. Even intelligence agencies in the U.S. have been hacked. So everybody is either has been or will be hacked at some point. The problem is, you know, if you look at catastrophe insurance and you look at underwriting and models, you can see hundreds of years of history. And yes, climate change is certainly impacting how we look at it, and it's changing the way the models are for insurance and reinsurance. But we do have a large database, and it happens reasonably slowly. Cyber is something that's very new, and therefore is not, we don't have hundreds of years. And more importantly, it evolves so rapidly. It changes not every 10 years or every 10 weeks, but every 10 days. And so being able to keep up to speed with that is extremely important. The other thing is, in terms of working with our clients, the ability to get in and look at their infrastructure vulnerabilities from a critical standpoint, to look at their personnel and their processing issues, because many of the biggest cyber attacks happen from within. Somebody hitting an email and downloading a document thinking it's one thing, but it turns out to be a phishing expedition and ends up infecting the system, and before you know it, the whole system has been compromised. So helping clients figure that out as best as they can, and to monitor that and to constantly improve that and see where they have weaknesses is very important. Another thing that we have is a model that helps us to quantify and score each client. So that gives us the information we need to work with those clients. And then lastly, we have a global cyber defense center. I think we might be the only insurance company in the world that has this. And it's located in the United States, and it's actually housed with not only technology experts, but with security experts, folks from Homeland Security, from the CIA, and others, to understand the risks from a security standpoint as well as a technology standpoint. And we're looking at all of the inbounds, every piece of equipment, my cell phone, my iPad, desktop computers, of all of our employees and all over the world that may be connected to an AIG system are being monitored in real time. And it's very, very high tech. And the other thing that we do is we look at the dark web. We have folks who are dedicated to just examining the dark web on an hourly basis to see what's out there, what's being offered for sale that might be, in fact, ours or one of our clients. And that's another way of which we're focusing very seriously on the cyber, both as a cyber risk to us as well as from an underwriting perspective to our clients.
Thank you. We have to manage time, and maybe just one last question for all of you, for three of you, and thank you very much. Thanking you very much for being here among us and sharing your thoughts and your vision about these new things in your industry. I just want to give one question to the audience, and you can use your app and maybe the phone number, which should be behind me on the screen. The question is in French. Disruption en assurance. Et je vous demande de faire un choix. Quels enjeux pour l'industrie de l'assurance? La question va être posée dans quelques instants. Voilà, je l'ai. La disruption en assurance vous apparaît comme quelque chose qu'on appellerait la disruption. Alors, une menace, une période d'incertitude, une opportunité, ou un effet de mode, B1, B2, B3, B4. And you have the question in English, disruption in insurance seems like a threat, a period of uncertainty, an opportunity, a passing trend. I'm very interested to learn from the audience and have your answers. Mr. SPITZ, you're mentioning the case of Alan, we pronounce Alan, this new Alan. This is the first time since 30 years, I guess, in France, a new company came as a new player. So it's a long time. And you mentioned also Lemonade, which is overseas. How do you see that big players in insurance industry can deal with all these new companies, and particularly insurtechs that need a lot of money? They want to grow, they want to develop, they think that they can bring something new to your industry. How do global players and important players deal with that?
Well, I mean, in the case of Alan, it's true that we have never seen such a new member of our association coming so quickly from nowhere and starting operations. But obviously, I will not put any judgment, neither on that company or on any Limonade or whatever. I mean, we know that they have published their figures these days, and some people think that they are not yet on the green, but we shall see. I mean, it is obviously something that will change. But as I said, InsurTech is a more global momentum, and these companies are exception. What is important is to see all the new areas in which we develop partnerships with InsurTech. In France, for instance, 70% of the InsurTech are linked by one way or another to companies. Some provide finance, some provide help, some become shareholders, some bought them. You have all the kind of combination. It is clear that you cannot be aware of that movement, of that challenge. And what is interesting in our business, in the industry of insurance, is that we are not impacted only by directly by InsurTech, but we are impacted twice, because we must answer to the impact on our clients. Mm-hmm. Companies in every single field have a different effect from the new technology. It's not the same thing on a distribution company, on an industrial company, on a car factory, on whatever. And we have, so they change their model, and the insurers have to give the right answers to that. So we have not only to change because we are touched as everyone. We have to be we have to change also because our clients want us to fit with their new needs. So this is what is at stake, and this is exciting. It's difficult too, but I think that we have all the capacity to react, and if we don't, again, we are not going to talk about only about pure players like Limonade or Alan or others, but we can think of other players, bigger, and that is something that I think we have to keep in mind. This is the beginning of a new era, and there will be winners and losers, obviously.
Yeah, sure, thank you. My last question for you, Inga, is just want to ask you, and thank you for sharing with us, but how do you see that from Lloyd's? My question is, what could be the priorities for you as Lloyd's about what we heard as what new technology brings, just like price comparison technology, mobile internet transactions, peer-to-peer insurance, sharing economy insurance, and all these disrupting concepts. What could be the priorities for you?
Well, of course, they're all of the above. And I don't know whether you've got all the answers in for your questions, but I would have said from your questions to the audience, yes, we see it all as a threat. Yes, we see it as a period of uncertainty, but boy, do we see it as an opportunity, and absolutely not a passing trend. But this is what we've got to do. We've got to look at all of these aspects and think about how we can make these into opportunities. I think there's stacks of business opportunity with what technology is bringing along, and the sharing economy and all of this, and Lloyd's is doing its best to support actually all of these sharing economy firms, and I think Lloyd's now writes $1 billion of cyber insurance, and so one of the things is controlling the exposures. But we are fundamentally looking at our processes, which is going to be about putting the customer at the heart of what we do, and I think we can all be successful with disruption if we put the customer at the heart of what we do and think about what they want, and particularly think about the service that we're providing and that claims paying, which is, of course, the real essence of our product. Put the customer at the heart of what we do, and I think we can all be disruptors.
Thank you very much. I'm going to have maybe the answers of the questions. The question I gave to the audience and have the answers. Do we have the data about the answer? Oh, what do they say? So, 38% are transformation. Oh, this is the first one, yes. What is inspiration? Oh, thank you. They have done the job. What is, yeah, thank you very much. What is disruption according to you? So, transformation for 38%, then the other color is rupture, disruption, okay, and then innovation. Thank you. The second question, please. So, oh. Yes. Opportunity. Glad to have an audience which is optimistic, as we had the thoughts from our top speakers and keynote speakers this month. Ladies and gentlemen, join me to thank 3 of them, and all of them, thank you for being here, and thank you for giving us those thoughts. We're going to have a coffee break and come back for the next panel. Thank you.